Good morning, traders. This is Tony D from the easyMarkets dealing room in Sydney. We've had some continual sell-off here in the US dollar. This is day 4 of the sell-off. The market has been slowly burning lower here on the US dollar, new lows on the US dollar index. Matt, there's a couple of reasons for this. There's US dollar selling for month-end flows. Basically, US stocks have outperformed the global peers, and the rebalancing in that effect is actually to lower the amount of US dollars needed by these global funds. So this US dollar selling it's been noted in past, and it's been happening for a lot of the last three or 4 months when the US index, Dow Jones and such, has been outperforming. If you are looking at also other reasons to sell, the flattening of the yield curve, you're probably hearing about this a little bit on CNBC or Bloomberg. What this means is that the 10-year yields and the 2-year yields are getting closer together. Now that's generally seen as some sort of stagnation in the outlook for the economy. There isn't a really long-term uptrend going on. The returns from investing in longer-term assets isn't as high. Generally, it does have a relationship with selling of the US dollar, and it's seen as there's going to be better opportunities to invest in other areas, other countries. So look, the story for the US dollar is not saying it's all done, but you are going to have to see some acceleration of the Fed rate hike plans. Otherwise, the biggest potential movers are from other ECB or the BOJ or the RBA and RBNZ. Easily could see these turn into rate hikers early next year, or much earlier than expected in the first 6 months of next year if we start to see inflation come around. And so the US dollar story, well, it's very mature. You know, the Fed's raised rates and it's priced in another 2 rate hikes. There may be a little bit of room for US dollar strength if you get the pricing in of a 3rd rate hike next year. And the first piece of data regarding that is the NFP on Friday next week. But at the moment, the US dollar is getting sold. Euro is pretty close to 120. We talked about this last week. If we get a move on the euro above 119, then the chances of it testing 120 are pretty strong, given that it's like a magnet that should attract it. And it's getting close enough now, 50 pips away. If you're selling the euro, you'd probably wait to see what happens. So it's a bit of an inevitability. Same with the gold on the move up towards this 1300 level, a big level. You wouldn't sell at 1294 if you could sell at 1300. So might as well wait and see if we get there. See this uptrend here, this fairly relentless 2-week rally. You can see this replicated on many charts as well. So copper's looking very similar to that. It's just a relentless rally going on in copper. This is helping drive Aussie. Aussie's up above 78 now. Kiwi dollars testing the 71 level. You know, we're talking last month. It'd have been unbelievable to see this rally. This rally is come as the RBNZ fears of the new Labour government over there, and the RBNZ going to be torn down, and there'll be all this new political interference. It's just disappeared. And we've seen the market going back to the fairly aggressive buying on the Kiwi dollar and its pair, which is pretty illiquid. So you are seeing sharper moves than many expected. Now this is playing out in the Aussie Kiwi pair, with the Aussie Kiwi rally being stored because the Kiwi's keeping pace with the Aussie. So those who trade the Aussie Kiwi, the 110 is a huge level, and we've failed now 4 times to get above it. So you want to be a little bit careful trying to pick the buy on this side. You may actually want to be waiting for a price closer to 109 or 108.50 would be ideal. Alright guys, that's about it for today. If you're trading the Bitcoin, you're seeing the selling from yesterday that we talked about on North Korea, crackdown from the regulators has subsided a little bit, and it's pretty stable today so far, above the 14.2 level. Remember, there's going to be a lot of thin trading for the next 3 days, as you have the weekend, then you have New Year's. So there's going to be a lot less financial participants and professional participants. You might see a bit more volatility than expected if there's any news, but also it's a two-edged sword. When you have low liquidity, you might see nothing, or if there's a news, you might see something huge. So you got to play it by a little bit of careful. Many traders actually choose to stick away from such an environment because it becomes a little less predictable when there's not much going on. We'll be back on Monday though. Next week's huge in terms of trading, so we'll be back on Tuesday. We'll give you an update and get you ready for the week ahead. The main thing being the non-farm payrolls.